My channel is Jenna Citrus with She Finance. Man, those two do not somehow tumble in together well. But anyways, hi. And today we're going to be going through my managed by Robinhood individual account. So Robinhood has this option where they charge 0.25%, which if you're comparing it to something like Edward Jones, which I believe is 1% last time I checked it out, that's like a decent, so it's like a quarter adjustment, but you've got some robo investors on your side. I don't know how much of this is AI powered or not, but let's dig in. So I invested sort of, I'll call it right before the dip of March 30th, and that was so February 3rd is when I started investing, and I put $1,000 in, and it did what the market was doing. It was just kind of going down, but it did sort of dramatically recover, and things have been looking up since then. I put some more money in on April 16th, $100. I'm like, okay, you're getting up. Which I should have done was put some more money in here, like people should do. Invest in the dip, right? People can't do that. It seems so scary when the dip's happening, or like when you're at the bottom of the dip. Because I mean, I just sort of started noticing like, oh, the stock market's doing this, and again, here May 14th, I sort of noticed, oh, the stock market's doing that, and so I did start investing, but then it recovered, which was nice. So, or almost recovered. We're getting close. But anyways, I did set up a reoccurring 1st and 15th for investing $25. And I thought this was just a fun and beautiful little brilliant tool that Robinhood has in here. So if we just left our $1,100 alone and didn't make any more deposits, in 30 years, you might have $20,000 in there, which is cool. But if you did a monthly deposit of $50, you'd have $128,000. So that's sort of the value of getting yourself set up on an investment habit. And then, of course, the value of compound interest, which I'd love to not leave it in there that long. It's like, what if I pulled it out in 10 years? It might be $13,000, about. I don't know. But we did our starter reoccurring deposit, so that's always good. Anyways, we'll go back in here. So I used the highest risk profile they had available. So there were very few, we're just in the cash sweeps program. Opportunistic funds. Well, I guess we're starting at the bottom. Here we go. This is what we just have. Yeah, that's actually quite a bit. $44, and we've lost a little bit, which happens from time to time. So this is something I not really even heard of. I mean, I've researched just a little because I was like, what do we buy? But there were definitely some things in here that I was like, I didn't buy that. Why am I getting this perspective? So we do have some SCEV, some treasury bonds, and honestly, I don't need you to buy $100 of treasury bonds for me. I'd probably rather you not, I can't trade into it, but you can make a list that says, I don't want you to buy treasury bonds. So, oh wait, I don't have $100 invested. I have $84 invested. We should go back and revisit that other figure before I tell you the wrong thing. Whoops. I'm going to say we actually have $5 in this. Yep, no, $8, $9. So there's some things in here that I'm not really sure what's going on, but they know what's going on, maybe. They're buying in or buying out. I want to see if we can see in just a little bit. Yeah. I did not know this existed, but the Spider Euro Stocks 50 ETF. Okay. Just kind of seeing what you got good. Let me scroll down. Nope, you cannot see the goings and comings of this account. So that's a little bit frustrating to me, at least obviously on here. Like I've been in my dividend section and I'll see like a 1 cent dividend and I'm like, what's this? And then I'm like, oh, it's something the Robinhood account bought for me, which here we go. We'll do a little breakdown. Got Microsoft, Nvidia, Apple, Amazon, Alphabet or Google, Broadcom, Eli Lilly. Man, I've got some Lilly. It's just like this account, like my Edward Jones investor had some. My partner, who sometimes helps me with a little bit of advantagement, but it's like everybody loves Lilly. I actually knew about Eli Lilly because I grew up in Indiana, and I was like, oh, local pharmaceutical company. Seems like something logical to invest in. But I sold it when I needed money for a house at $700, and Slightly regret that, but it's like I needed some money and it was up, and I'm like, well, you do what you got to do. So that's why it's nice to have access to a traditional account so you can kind of make those decisions for yourself, and then grow to regret them later. And then some longer term investment accounts. So I have no idea what Eat On is. I'm probably mispronouncing it. Let's see. It's a power management company which provides energy efficient solutions for electrical, hydraulic, and mechanical power. Sounds promising, although today it's gone down just a little bit, but overall it's still slightly up. I don't know. Although interestingly, my average cost was $403 and it's down to $390. But how? Oh no, there we go. I have I am getting everything backwards today. My total return is negative 39 cents. Here we go. Today's return. We're going back up. But we may have just invested in this. Let's see if it shows us. Nope, it doesn't show us when we got into this or not. That is one sort of negative thing, in my opinion, but that's what Robinhood thinks we should do. I strangely have a lot of trust in Robinhood. Like, I don't know if I should have this much or not, but I do. And I also pay for gold, which is very weird for me because I'm not the kind of person that likes to have a monthly recurring subscription. But I did the math, and if I'm doing a yearly investment of maxing out my Roth account and they're doing a 3% match with gold, that sort of positions me in a way that I would be making more money than their $50 a year or $5 a month fee charges. So that was my my math there. But there's just a ton of lots of stocks going on out here, which do have potential for growth. Although I just wonder how much growth 8, 9, 10, 7, $6 has in all of these different companies. I mean, it's good, I guess, in the sense that, like, if, say, Quanticom or something, for example, just, like, really pops off, then my $6 could morph to, like, 12 to 24 to whatever. And I wonder if they would try to rebalance my portfolio down by selling some or not. I know they said they could tax loss harvest for you, which I don't know if I like that or not. Like, I love the idea of not having to have, what is it? Like, tax bills, but in one hand, it's like you kind of get some that you can have without having to have too much. I don't know. Sorry if that doesn't make sense completely. But anyways, yeah, I don't know. It's just, it feels like owning an index fund while still just owning the individual stocks. There we go. Oh, you know what? That is actually the opposite of the index funds that I have, which is fine. I have decent strategy. We have $36 in the Russell 2000, and we have gained $33.44. My bad. But I actually don't have any iShares Russell 2000 ETFs, nor I don't think I'm doing any cash covered calls on this portfolio either, because I've heard some slightly bad things about it. I don't remember what they are off the top of my head, but it was enough for me to be like, leave well enough alone. But, well, you see 42% growth over the past year, but look at that. Ooh, 5 years, 28% total, which is not great. So let's scroll down here and see. Ooh, yeah, expense ratio, always fun to look at. That's nice at 0.19%. I mean, that is extreme in the past couple of years, but you go back here for 5 years and you're down to 5.62%, which you can almost get in a savings account. So you end up with not 8.4. So that's decent-ish, but it is, you just gotta hang on there a couple of different years, but then you get to now and you're like out of control. So maybe there's a reason they have me invested in it. Well, it's all the U.S. small cap stocks. Oh, okay, now I'm remembering what I heard about this. So it's a lot of risk and not always a higher return. So, like, the risk factor is pretty high that some of it might trash, but reward doesn't always track. Like, some of them will go really good and then a lot of them will go bankrupt. So I do have some other stocks I've gone really bankrupt on, which we'll have a whole little video about that. But anyways, this is Robinhood managed. I've got some reoccurring investments set up, and we'll see what happens. It's decent. It's happening. It's doing the thing. It's gained 6% for the year, so not upset about that. And we'll start rolling some more investment into it after we've done a small pressure test. And I have been getting monthly fees, and they're right around 0.22, or like 22 cents, sorry. I don't have to give you guys math like that. It's not a math problem. And that is, yep, that's pretty much right on track for being 0.25% of the total amount invested. I don't know how much more we want to invest. I don't know. I might feel comfortable up to like 10K, but this is a personal thing. Again, not investing advice, just a random girl with a Robinhood account, seeing what happens when you give it a high risk portfolio. And yeah, quit owning bonds. Why do we have to have bonds? I'll poke around in here and see if I can get any more, get some of my bonds out of there. But thanks for joining. I appreciate you, and have fun. Save money. Live long and prosper. And of course, don't forget leg day. You know who says that. You know, that's a quote.